Welcome back to the podcast, Generate Income by Selling Options. In the previous episode, we explained how the Greeks affect options and what that means for selling options. We introduced the Greek, theta, and discussed theta decay. Let's now dive into a new topic and discuss the Greek delta. Before we talk about delta, as a reminder, please support the channel and subscribe to this podcast in order to stay updated on upcoming episodes. And now, let's bring in our hosts, Adam and Isla.
Hey everyone, and welcome back to the deep dive. Today we are going to be tackling a pretty complex but fascinating topic in the world of options trading.
Yep.
We're going to be diving deep into option writing,
Right.
specifically focusing on something called delta.
Yeah, delta's a big one.
It is, and I think it's something that can be intimidating for people who are new to options trading.
For sure.
But even for those who've been trading options for a while, having a solid grasp of delta can really make a huge difference in terms of managing your risk
Absolutely.
and really understanding the dynamics of what's going on
Right.
when you're writing options.
Yeah, option writing itself, it can seem a little complex at first, but it's actually a lot like, I like to think of it as being a landlord for stocks.
Oh, interesting.
You're essentially selling someone the right, but not the obligation to buy or sell a particular stock at a certain price.
And for granting that right, you collect a premium kind of like rent, as you said.
Exactly, like right.
Now, the concept of delta comes into play when we think about how an options price fluctuates with changes in the underlying stock's price.
Yeah, and delta's that key measure. It tells us how much an options price is expected to change for every dollar that the stock moves.
Okay.
So a call option has a delta of, say, 0.6,
Mm-hmm.
and the stock price goes up by $1, the options price will likely increase by about 60 cents.
So it's like a gauge that helps us understand how closely an options price is linked to the underlying stock's movement.
Exactly. It's a measure of sensitivity.
Interesting.
But here's where it gets even more interesting. Delta isn't just about measuring this price sensitivity.
Okay.
It can also be thought of as the probability of an option ending up in the money at expiration.
So in other words, a higher delta suggests a higher likelihood that the option buyer is going to profit, right?
Exactly. So for example, a call option with a delta of 0.8. That
Mhm.
implies there's roughly an 80% chance that the stock price will be above the strike price when the option expires.
So this probability element really adds a whole other layer of complexity to understanding delta.
It does.
So for someone who's maybe thinking about getting into option writing, how should they be using this information?
What's important to remember that as an option writer, you're on the other side of that trade.
Right.
So if that option buyer profits,
Uh-huh.
you potentially lose.
Yeah, that makes sense.
So understanding delta
Right.
is crucial in assessing the risk associated with writing a particular option.
So a high delta option means there's a greater chance that the buyer is going to exercise their right.
Yes,
And that could potentially lead to a loss for the writer.
potentially.
Okay, now I've heard this before, that higher delta options generally come with higher premiums, higher potential for profit, but also higher potential for risk
Yep,
for the writer.
exactly.
So essentially what you're saying is that someone looking to write options could use delta as a way to gauge their own risk tolerance, right?
Absolutely.
Someone who is more risk averse might lean towards those lower delta options,
Right.
whereas someone who's comfortable with maybe a little bit more risk might be okay with higher delta options.
Exactly. And that's the beauty of option writing. There's this flexibility.
I see.
Writers can fine-tune their positions
Okay.
by selecting options with different deltas
Right.
based on, how much risk they want to take,
Their risk tolerance.
their market outlook, their overall strategy.
So it's really like having this toolkit
It is.
with different instruments, and each one serves a specific purpose.
Yeah.
But knowing which tool to use
Right.
and when to use it is really key.
That's the art of it.
Yeah.
That's the skill that you develop over time.
So we've established that delta is this really interesting balancing act
It is.
between risk and potential reward
Yes.
for option writers. But I imagine it's not just about picking an option with a certain delta and then hoping for the best. Like, there's got to be more to it than that.
Yeah, it's about actively managing your positions.
So what are some of the tools or techniques that option writers actually use to manage their exposure to these delta shifts?
So one common technique is called hedging. Hedging involves taking an offsetting position to kind of neutralize some of that delta exposure.
So for example, let's say you've written a call option with a high delta and the stock price starts to rise.
Right.
making it more likely that the buyer is going to exercise their right to buy the shares.
Hmm.
Can you give me like a practical example of how hedging might work in that scenario?
Sure. Let's imagine you wrote a covered call option,
Okay.
meaning you already own the underlying shares of that stock.
Right.
Now, if the stock price goes up and your call option's delta increases, putting you at a higher risk of assignment, you might decide to buy more shares of that same stock
Okay.
to hedge that position.
I see.
Does that make sense?
Yeah, so in essence, you're kind of mitigating the potential loss
You are?
from the option being exercised because now you've locked in a profit on those additional shares.
Exactly. You're creating a buffer.
Okay, I see.
Now, another technique is called portfolio rebalancing.
Okay.
So as market conditions change and those deltas of your options shift around, you might need to adjust the overall mix of options in your portfolio
Okay.
to maintain your desired level of risk.
Gotcha. So it's kind of like keeping things in check,
Exactly.
making sure that your overall portfolio isn't too exposed
Yes.
to one particular direction of movement. Now, while hedging and rebalancing are valuable techniques, I understand there's a more advanced way to fine-tune delta exposure.
There is.
And that's through something called option spreads.
Option spreads, yes.
I've heard about option spreads.
Have you?
They can seem pretty complicated, but it sounds like they offer more precision for managing both risk and potential reward.
Yeah, option spreads involve combining multiple options
Okay.
with different strike prices and expiration dates.
And by strategically combining these options with different deltas,
Right.
writers can create spreads that have very specific risk profiles.
Exactly.
It's like using a scalpel instead of a hammer.
I like that analogy.
All of these techniques that we've talked about really highlight how active and dynamic
You did.
option writing really is.
It's not passive.
Yeah, it's not just set it and forget it.
No.
You've got to be on top of it.
Yeah, constantly monitoring,
Yeah.
adjusting.
As those market conditions evolve,
Absolutely.
and let's not forget about all those other Greeks that come into play.
Yes, the Greeks.
We've been spending a lot of time focused on delta, but I know there are others like
Gamma,
gamma,
theta,
theta, vega.
Vega. They all sound like they belong to a fraternity. What role do these other Greeks play in option writing? Well, each Greek provides a unique perspective on how an option's price will behave.
Okay.
For example, gamma measures the rate of change of delta itself.
So it essentially tells us how fast that spinometer that we talked about earlier is actually moving.
Exactly.
Interesting.
So a high gamma means that the delta of an option can change very rapidly,
Okay.
which could significantly impact an option writer's position very quickly.
Yeah, that makes sense.
So understanding the interplay between all these different Greeks is essential
It is.
for making informed decisions.
This is a lot to take in, but it's super insightful.
Yeah.
It seems like there's always another layer of complexity to uncover when it comes to options.
Oh, absolutely.
It's fascinating.
Yeah, it's a continuous learning process.
It is. I know we have some case studies from the sources that were submitted.
We do.
Can we dive into one of those?
Yeah, let's look at the case of an investor who decided to write a covered call option on a tech stock. And they chose this strategy because the stock had been relatively stable
Mm-hmm.
and they were comfortable with the initial delta exposure.
So they were essentially betting that the stock price wasn't going to move significantly,
Exactly.
and they were going to collect that premium while holding the shares.
Yep.
But then
And then
the company released their earnings report,
oh boy,
and the stock price jumped significantly higher
it happens.
than expected.
Yeah,
And as we've talked about, as the stock price moves closer to or above that strike price,
right.
the delta of a call option increases.
It does.
So this means that the probability of the option being exercised shot up. And our option writer is now in a much riskier position.
Riskier than they anticipated.
Than they initially anticipated.
Yeah.
So what happened?
Well, they were faced with a decision
Yeah.
with the stock surging and that delta exposure soaring.
Mm-hmm.
They could either buy more shares
Okay.
to hedge their position,
Okay.
potentially minimizing their profit if the price kept going up, or they could close out the covered call,
I see.
potentially accepting a loss at that point.
This example really illustrates perfectly how a shift in delta can significantly impact
Yeah.
an option writers' position
For sure.
and force them to make some tough choices.
It does.
And I think this really underscores why actively monitoring delta
Yes.
and understanding the tools to manage its impact is absolutely crucial.
It's critical.
It sounds like option writing really requires
It does.
this deep understanding
Yeah.
of these concepts
Mm-hmm.
and this vigilant eye on the markets.
Yep.
It's not for the passive investor.
It's not for the faint of heart.
That's for sure.
Yeah.
So for our listener who might be considering dipping their toes
Yeah.
into the world of option writing,
Mm-hmm.
what's the biggest takeaway that they should walk away with?
I think the biggest takeaway is that understanding delta is absolutely essential for anyone even considering option writing. It's not just about knowing the definition.
Right.
It's about understanding its practical implications
Yeah.
and how it plays out in real-world trading scenarios.
It sounds like delta is almost like a language,
It is.
and understanding its nuances
Yes.
is really crucial
It's key.
for success
Yes.
in the world of options.
Absolutely.
And I think it's also important to point out that
Yes.
delta is just one piece of the puzzle.
It is.
We've touched on some of the other Greeks, like gamma,
Right.
and as you delve deeper
Mm-hmm.
into the world of options, you'll encounter others as well.
You will.
Each one providing a slightly different perspective
Yes.
on how an options price will behave.
Exactly.
So it's like this whole new world waiting to be explored,
It is.
with delta being the initial key.
Yes.
That unlocks a deeper understanding.
I like that analogy.
Now let's leave our listener with a thought-provoking question to ponder as they continue their exploration of options.
Sounds good.
Imagine you believe a certain stock is going to be extremely volatile
Okay.
over the next few weeks, but you're not sure which direction it will move, up or down. How could you use your knowledge of delta to potentially profit from this situation as an option writer?
Yeah, it's a great question.
It's a tough one.
It is.
But it really underscores how important it is to not only understand delta in isolation, but also how it interacts with your overall
Right.
market outlook
Yep.
and your trading strategy. Option writing provides a lot of flexibility for tailoring strategies to different market conditions
It does.
and risk tolerances.
Yes.
The more you understand about these concepts, the more equipped you'll be to navigate the complexities of options trading.
That's the key.
Well, I think this has been a really incredible
It has.
deep dive
Yes.
into the world of delta and option writing.
Yeah, a lot covered.
It's certainly given me a lot to think about,
Me too.
and I hope it's been valuable for our listener as well.
I hope so too.
Until next time, happy trading.
And make sure you subscribe to this podcast and follow us on X to be notified of our next podcast episode. Just click on that follow or subscribe button. Our X handle is the @ symbol, following by selling, the number 4, premium. All one word.